All right, guys, time for a recap. Tuesday, holiday weekend after. So I didn't get too much live trading in today, so we made some predictions for my group in the Discord and then hopped out for the day. I had to get some medical stuff taken care of. So let's go over the day, and I really didn't put too much out. It was very simple for us, so let's get into some of the resistance points. This is a counter trend gold level you're going to see right at the top of the screen right here that pre-market was forcing itself into, getting some weird algos going there. And that is a very long-term, very unique line set from the decades ago. I'd have to go to the Max Weekly and show you guys the over-under way back down here in the housing crash recovery of 2009. Also picked multiple tops on my algorithm line right here in on what I teach here. Here in the 18, the Trump dump, the pandemic, and also back up a little bit here. Every single one of these tops into, that was the 15, here it is right here. The 2014, 2015 double W drop as well. So all the tops pretty much were predicted off one of these algo lines I have. That is a very huge over-under. And then after the pandemic squeezed into free money printer mode, as you see here, let me scale down a little bit. You notice after the pandemic dump, once that pandemic top was hit again by my algo line of sell and max resistance, we had a pandemic pop back up. And then as we came into over that gold line, we had money printer mayhem, right? And that obviously went flying up to some hefty extensions. Well, that came into an abrupt sell this last year, and we're coming into the next year after. And that line is still very detrimental to price action. So we had some very big over-under volatility on this gold level, and we've had perfect top picks to date. Now, this line scales differently as we get into intraday trading that it will weekly. So I try to stay on the 5-day, 5-minute to scale on Thinkorswim. And this is where that trend comes in this morning here. Now, I called short or long, of course, way more short biased because of, again, our marker being the 30-30 standard deviation, right, being extended. So here's our +2. You can check out our other videos to break those down. Regression trend in the center. So last time we were up here in the zone, we were in between again, the 1 and the 2 in the positive. This is overbought, okay? So we cannot be buying into a standard deviation this high. So what did we see this morning? Well, lo and behold, we almost tagged to the +2. And as this is forever calculating, it may have moved just a little bit, but we were more or less intraday. So I posted and tagged my group. Let's see if I can bring it up here real fast, just for the day. I like to put out some daily stuff for everybody in our Discord. So we have an announcement right here, and I made this at 6:40 in the morning, so it won't be live. We got some blood work on, but the 30-minute 10 SMA will scam up over to 420, 420. If not, we're going to go under the 10. So I put it at a 30-30 10 SMA for gap fill or push to the 1618. So we're going to go to the gap fill side. Obviously, here's the 10 SMA in the dash line. So the rejection of the gold level, and right as we broke under, and that happened the last 30-minute candle at pre, which was perfect because it shut down, popped into the gold level. So we got a live trading tag, live trades here in the black, popping into that golden trend, right? So we have a hard hit on the scale down to the 5-day, 5-minute of this line. Then the 30 minutes started to lose the 10 SMA and then come back down to yesterday's highs, and that was going to be that gap fill. So if you were trading last week at the end, we still had this weekly gap that we never had filled, right? And then we had this huge panic day, and I still think we're going to get a sell the news to melt up. And we got a little bit of a sell the news, debt ceiling news over the weekend. But you notice right here, last trade day, Friday, we had a no fill. So in between the last trade day's high and the weekly gap, there was still a gap. So we call that a double gap. So it's very rare that those don't fill. If we would have got a magnet, which we did today, of a fill, that's what happened, where it breaks down and comes back down to fill those targets. Now, if we go to an intraday chart and we look at yesterday's highs, you can see the bounce point and the short targets that we had. So this orange dash line is coded intraday for us right here. This is yesterday's highs. So that gap exists between the gap top and yesterday's highs in between here, okay? So that is the gap. Now that gap is going to lead to a obvious bounce point after it's filled. So it was short biased, to gap fill, which is here, yesterday's highs, then long scalp. Okay, so you had about 12 to 15 to the downside there. It hit yesterday's highs, filled, poof, went slamming back up, found moving average rollover, and then dwindled down, which is perfectly fine. In the flip side, if this would have taken off, and let's go to different tab that I got, the 30-30 would have held above the 10 and it would have pushed us into the 1618 and squeezed up to 424.31. Now, again, deviation was showing us a little bit more downside than anything for that on the 30-30. So we weren't really looking for that easy up. But now that the gap is filled, what do? Well, let's peek at 30-30 again. It's one of our favorites. Now the 30-30, we're still above the standard deviation +1, but the moving averages are what is going to make this one trade viable. For one, let's go here. So 1618, 2618. These are double lined here. So this is going to be a long melt up target when we start firing up. We will get to 424 and change. That is a 1618 weekly and a intraday 2618. Obviously, you see right here from last trade is fibs. We came up to target number 1, and usually we roll back down from 1618 down to the 100 fib and consolidate before we head back up. Now, two things are going to happen. Same exact thing as the other predictions I made. We are going to watch the moving average catch up. 100 EMA is here in the green, 50 SMA in the red. It already broke the 50, 10 cross. So I look for a false cross. This is what I'm going to look for, because as long as we're above the 100 EMA, we have false cross squeeze tendency to come back up because we filled this weekly gap. This weekly gap is now done. We filled it. It is not there. So if we happen to pressure move back up that gap, we will squeeze because the shorts will panic through that magnificent push. Now, we don't get too far outside of the weekly deviation, okay? So if we get a squeeze up from here and a little bit of a melt up, I'm only looking to ride it now. This is our long prediction. If we stay above our 419 and change, okay? 1618 Fibonacci right here. If we stay above that and the 100 EMA on the 30-30, okay, green line here, we usually break through the 50, bounce the 50, and then trail back down and make a decision in between the 50 and the 100. So if we break back up over the 10, it gets a false cross, which means the 10 goes back over the 50. Okay, so if the 50 moving average gets recovered, 10 crosses back over, we are looking for that squeeze 424. If we stay under the 50, okay, 10 proceeds to be resistance rolling, we will break the 100 and we will come back down to a 200 SMA 30-30 catch up. That is your over-under mark and your two markers for magnets. So that means if it is above the 100 EMA and the trend of the 10 and the 50 are continuing higher, you are looking for that squeeze back above 421 and on the way to 424 and change. If it goes opposite, where the 10 stays under the 50, right, breaks through, breaks the 100, we lose that. We will travel back down towards 417 and the 200 SMA 30-30 and back test to the 100. Now, remember, when we complete the Fibonacci sequences from this 100 fib, and this is a double 100 fib because we're using a well, separate strategy. I can't actually release that one, but we're using a strategy here with what I got on our Fibonacci markers here. And what I want to see is this 1618 become resistance to pull to the 100 to start a melt up back up. Now, our targets are still going to be a weekly deviation. So if I go to the weekly deviation, and I can't tell you how I have this one on, but okay, I don't even have it on, so I'll have to build it. Maybe you guys will catch it then. All right, so we're going to go to this chart. Our deviation calculations here, it does not give too much room past this many times. So when we are on the 1 year weekly, the likelihood of going plus or minus 1 or 2, just like we use the 30-30 for intraday trading, this is very long term. The likelihood that we get outside of the +1, -1, okay, this is the center deviation, is very rare. It had to catch extreme volatility with extreme catalyst to do so. The last time we were at -2 down here was a 200 SMA catch up on the weekly, and it got bought up and slingshotted itself right to the +1 damn near, and then fell apart to the -1, then pushed to the +1, then fell to the -1. I see you understand the trend here, then push to the +1. So I'm looking for that further FOMO move to at least the +1 weekly if we get this 30-30 to turn around into, again, we got Powell next week and so on and so forth. So this could be the slow week, but I'm still looking for that press melt up. Now that weekly deviation comes in right now, 426. So those targets holding anything above 1618, pretty much 419, and the weekly gap that we had just filled that no longer exists. We will look to press past the daily deviation at 421.57 at this moment, and we will hold this and move back up. And again, if that is the opposite range, we still may need a relax day that goes beyond the 1618, hits the 100, rolls back up, blows past that 1618, tracks down 424 to 426. So that pocket in between the deviation and the weekly. Now, we needed a reset because on the 30-30, we were just too high, okay? So nothing can go straight up in a straight line. So what are we going to look for? Patterning, right? Let's look at our other indicators. So the last dump that we had down here into huge weekly support, okay? That's 38, this golden pocket we call it. We got a new high off that, okay? So that's a higher high. So what do we look for? Relax sideways to higher low territory for those moving averages catch back up, to melt back up to the next high, okay? Because we need a little bit of a relax. This overbought into +2. There was statistically no way without premium outside catalyst that this thing was going to fly past that, right? We needed some kind of fear, hype, and greed to move that market, and we did not get it. So that is the prediction under the 1618. I am hoping to see further melt up off the 100 EMA, the recross, false cross of the SPY to move higher, and we will continue looking for that into data. So I'll catch you guys on the next.